to you in part by A.G. Edwards, providing a full range of personalized financial, retirement, and estate planning services. A.G. Edwards, trusted advice, exceptional service. This week, loose panelists are Bob Stovall, Ann Sonders, and Barbara Marcin. His special guest tonight is Neil Hennessy, President and Portfolio Manager of the Hennessy Funds. Now, here's Rukeyser.
Good evening and welcome back. I was very disappointed this week to learn that Madonna is not watching this program. Now, to be fair, it turns out that she's not watching any television program. Husband Guy Ritchie says he and his seldom blushing bride have had their telly switched off for a good 3 years to avoid seeing any unpleasant news stories about themselves. Why, I've been watching her closely and diligently for years, even though you might think Madonna had long since showed everyone on this planet everything she had to reveal. Besides, with her career undergoing some severe bumps lately, I feel that right now, the poor girl needs all the good financial advice she can get. And around here, we live to serve. So if you happen to run into Madonna at Kmart or the A&P, please be sure to tell her on my behalf that the week hasn't gone all that well. And there is further concern that the major U.S. tax cuts proposed by President Bush and so warmly welcomed by Wall Street may get a less than totally friendly reception in Congress. And not even Evita Peron could put an entirely sunny face on the economic news this week. While the year-long rebound from recession is clearly continuing, the pace of growth over the past 3 months seems to have been even more anemic than previously believed. Consumer confidence, which has been the trump card in this recovery, is flagging a bit, while factory output is conspicuously failing to pick up the slack. It's scarcely the end of the world, or even of the recovery, despite some totally dark media interpretations of data such as a rising trade deficit. In the real world, that simply means that U.S. customers are still ready and able to buy a ton of imported goods. And Madonna, who has shown such a brilliant ability to shift moods on us, should certainly be told that Wall Street seems to be following in her active and somewhat dainty footsteps. After starting off the new year like Tess Trueheart, clamoring after the lofty Dick Tracy, the market this week seemed to be desperately seeking losing. Did Microsoft actually announce both a stock split and its first ever dividend? Sell the stock. Hell, it didn't say that all that sluggish business spending is about to boom next week. Did Intel raise its guidance, not to mention surprising on the upside in such minor areas as earnings, revenues, and profit margins? Sell the stock. The company said it was cutting back on capital spending, a subject on which Intel's previous projections have routinely proved wildly unreliable, not just for technology in general, but for Intel itself. Similarly, investors reacted with anguished disappointment to mixed reports from some other little companies like IBM and GE, as the S&P 500 took its biggest weekly hit in more than 3 months. Never mind that the market was merely having its first weekly loss of 2003, or that every major index remains comfortably ahead for the year. When the violins start to play, the spectators are expected to wipe all the smiles off their faces and weep uncontrollably in their seats. If we could just get Madonna to begin tuning us in, I'm sure she would understand that perfectly. I'm worried that she's going to miss something important, and I don't want to have to start holding benefits for her. And as the Dow Jones Industrial Average indicates, stocks broke their New Year's winning streak as traders fretted that a full economic snapback might be delayed longer than they had hoped. The blue chip index lost about 2.25%, though it is still ahead by nearly 3% since the end of 2002. And it was the same story. Bad week, still a good year for all the broader indexes. Concerns about the dangerous world situation pushed oil prices upward, cause further damage to the recently wounded dollar, sent gold to 6-year highs, and help such other presumed safe havens as treasury bonds. And if you think Madonna alone cannot rescue the financial markets, have you thought of trying the magic of Harry Potter? A mere 2 hours after becoming available on Amazon.com, the long-awaited 5th book in the Potter series became the online company's #1 seller, even though it won't actually be published till June. Meanwhile, I suppose long-term investors will have to play a little Quidditch and be patient. Bob Stovall, you were one of our most accurate panelists in predicting that volatile 2002 market.
Thank you.
Correctly forecasting a year ago that the Dow would bottom in the 7,000s. Do you think we're heading south again?
I think we're going to have a hard time having a plus year. My estimate for the new year is for the top to be not too far from where it is now and maybe finish down for the 4th year in a row, but not in a major way, and I hope I'm going to be wrong.
Why? Not why you hope you're going to be wrong, but why do you think we're going to go down?
The market's acting better than I thought it would. The market seems to absorb corporate statements as long as they make sense as to why they're not meeting their short-term estimates, because the companies seem to be adjusting themselves to increase profitability by cutting costs still, even though we're out of the recessionary thinking, you'd think. Also, in a matter of months, we should know more about it, probably have resolved our geopolitical problems, just having to do with Iraq perhaps, and certainly with North Korea, I would think. And the second half of the year could make me look too pessimistic right now.
So you're less concerned about the geopolitical situation than the economics side, is that correct?
That's right. I think that has a chance of being settled favorably, either by no action at all or by rather quick action. But we'll still have the high-cost structure. We'll still have overextended debt on the part of the consumer, and those things will be with us, I believe.
Would you buy anything at this point?
Oh, yes. I think what's happened to the market the last months and even today makes a lot of things interesting to me. I think, for example, that gold is still going to have a strong run because gold is benefited by low interest rates, and the European central bankers have stopped their sales of gold en masse, and some other internal developments. I think the gold price will rise further. I think oil should be in just about every portfolio, particularly if it pays a dividend.
Do you have stocks in those categories?
Oh, sure. I like in the oil group, there's a giant French-owned company called Total Fina Elf. Pays a dividend, is active in Asia, and it has better statistics than some of the other big stocks. In the the gold group, American Barrick has lagged the other gold stocks. It's sold a lot of production forward. Now that's stopped. And in addition to that, I like Dial, a consumer goods company, and American Water Resources. I think that water utilities, which had an up year last year as a group, will do well again this year, and that's a takeover target. Every small water company in this country, I think, is a takeover target.
And Dial and American Water could produce soft soap.
They certainly could, and we need some of that here.
Liz Ann Sonders, do you share Bob's caution about the new year?
Well, you know, where I differ from Bob is that I do think Iraq right now is the biggest concern. I think it's sort of the albatross that's over everything, and I think we're in a holding pattern as a result of that. The reason why I maybe feel a little bit more optimistic about once things are resolved is that I think so much is brewing in terms of sentiment. The economy, even though we've had fits and starts, starting to show some improvement. Those negative reports have largely been lagging type indicators. Earnings are getting a little bit better. And I think we're going to see some of that finally impact the markets at a point where this geopolitical uncertainty gets lifted.
So what are you buying these days?
Well, you know, related to the geopolitical uncertainty, I like defense here. I think we are in a multi-year, possibly multi-decade period of a secular change in terms of defense spending. We've underspent on that sector, so I think Lockheed Martin is a great play there. You know, I like the Microsoft earnings. I like the fact that they're paying a dividend, or at least starting to pay a dividend. I think if that stock continues to sell off, you know, below 50, that makes a lot of sense. And then another sort of niche area that I think is kind of interesting is the education space. That's a real growth industry right now, and there's a great little company, University of Phoenix Online, which is a division of a larger company, Apollo Group, that I think looks pretty interesting.
I know the stocks that Bob mentioned he owns a little bit of. Is this true of these stocks for you?
In the case of Lockheed and Apollo and Microsoft, actually, in a mutual fund that I own, but not outright positions in those stocks.
What would you get rid of at this point?
You know, I was looking at some of the best performers year to date, and it's amazing looking at the pipeline companies, the utility companies, the Dynagy's and El Paso and Williams, and I would probably take some profits in those, and in some cases they're up, 50 to 100%.
Barbara Marcin, how's it look to you?
Well, we really have not a respectable recovery at this point yet, and I think that's what was a little bit disappointing this week. As you noted, a number of companies released earnings, and if you could sort of pull together a few things that seem to run through GE, Microsoft, IBM, and Intel, it's that their sales and earnings and in the company's guidance, they say that operations have stabilized.
Thank you for watching, and remember to like, comment, and subscribe.